These are tough times, and they're getting even tougher. The clock is ticking. The countdown to collapse is well underway. What are you going to do about it? Will you just wait for it to happen, or will you be ready when it happens? The decision is yours, and yours alone. Join myself, Mickey Fulp, Robert Ian, David Morgan, Jeff Berwick, Elijah Johnson, Alan Butler, Gregory Manarino, Daniel Amaduri, Andy Hoffman, Tekoa Da Silva, Trace Mayer, one of the world's leading Bitcoin authorities, Bix Weir, Jay Taylor, and Gary Christensen at the Liberty Mastermind Symposium in Las Vegas on February 21st and 22nd, and learn how to create your plan to survive the collapse. The last Liberty Mastermind Symposium was one of the most highly rated conferences ever, and this one promises to be even better. Don't miss it. Join us and register now at libertymastermind.us. libertymastermind.us. This one is going to be out of this world, and it's going to be even better because it's in Las Vegas, Nevada. Go to Liberty Mastermind US and sign up today. You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1230 WBZT. Well, obviously, the bear market in precious metals, and especially in precious metals equities, goes on. How much longer is it going to go on? Nobody can say for sure, but it sure looks like we're close to putting in a bottom. We've got the daily gold premiums. Jordan Roy-Byrne with us now. Take a closer look at it and figure out if we can glean anything as to the future direction. Jordan, how have you been?
I've been great. Thanks for having me on, Kerry.
Hey, always a pleasure. So you think we've hit bottom yet, or have we got a little more testing to go?
I personally think we have a little bit more to go. I've been saying that for the last couple of weeks, but I feel that looking at these markets, we really need one last move down. There's a lot of strong target. I know gold is trading at, I don't know, maybe 1240, 1250 today, but I mean, there's some very strong targets right around 1100 or slightly below 1100. Of course, we have support at about 1200. That was the daily closing low. So we got so close to breaking below 1200. And I think when we break below 1200, that could bring about that final flush, and the turn could happen very quickly. And at the same time, looking at the stocks, the HUI, I know that's higher today. That recently made a low at 192, and I would like to see that break 192. It hasn't in the last week or so. So I guess the strength that we've seen in the last couple of days, it's kind of, I guess, forestalling this final move down that I've been waiting for. But, you know, Kerry, looking at history, one thing I wanted to do is compare these bear markets to all the bear markets of the past. And I'll just discuss this very quickly. But I basically put the current bear markets on a chart and compared them with all of the past with respect to the gold stocks, gold and silver. And with the gold stocks, they're essentially down about 63 or 64% right now. The worst bear market we ever had was 80 to 82. That was 72%. And all of the other worst bear markets range from about 60 to 68%. So those statistics tell you how close we are to reaching the end. And at the same time, looking at silver, this is very close to being the worst bear market in silver, excluding that 1980 to 82 crash, which was really one of the most remarkable crashes we've ever seen in financial market history. That was down, I think, 85% in about 2.5 years. And most of that loss came in the first 18 months. And looking at gold, the gold compared to the past bear markets is not as the conclusion, I guess, is not as obvious as what we have with the gold stocks and silver, but it's still there. And looking at that, that tells me if we do get a move below 1200, just history tells you that it's really hard to make a case that it's not going to be the bottom. So to kind of repeat myself again, I'm just looking for one final move lower. And I think if that happens, that's going to be the move that kind of marks the bottom and then generates that reversal. So if we do get lower prices from here, I think they're going to be unsustainable beyond just a couple days.
And right now, though, the way things stand, Jordan, the prices of gold and silver are below the cost of production. So that's putting a lot of hurt on these companies and driving out the more marginal companies as well.
Oh, yes, absolutely. I mean, a lot of companies are in trouble, and that's going to affect future supply. So even if the market puts in a bottom here in the next couple weeks or month or two, and we get a good year next year, which I think is going to happen, and we'll see the metals prices recover. I mean, that is not going to help a lot of these companies. They're not in a position. I mean, they need a lot more capital. They need much, much higher prices. So even if we get a turnaround in the market, that is really not going to help supply demand, and it's not going to help increase production. So I mean that stuff is kind of a lag, but looking out over the next couple of years, I think we're going to have a supply issue. And I mean, looking out beyond that, it's just when gold starts going back up again and we retest the highs, it's just going to be very difficult, I think, to get gold. As we know, the ETFs are being drained, and most of that, I mean, that's not my area of expertise, but I believe most of that metal's been going to stronger hands over in Asia. And as we were just discussing, at the same time, it's going to be very difficult for mining companies to increase production in the coming years, even with prices going materially higher. So that's kind of something I foresee down the road the next 2, 3, 4 years, where it's just going to be very difficult to get metal.
Right. And obviously it's classic economics, supply, demand. The demand is going to be there. The supply is not going to be there, which is going to lead to higher prices at some point.
Yes, absolutely. Although gold is a little bit different because it's really driven by, I mean, it does have fundamentals, but it's driven by investment demand. I guess some people would call that speculation, but it's really investment demand which drives it. And I mean, that's what I believe, and I think that's what history shows. And I mean, because a lot of people are talking about, jewelry demand out of India and people buying out of China. But the interesting thing is, usually that kind of demand really picks up when the price goes down, and so it's really investment demand and kind of speculative demand that drives the market. And Kerry, once this market just puts in a bottom and gets a little bit of a stronger footing there and starts to turn back up, that's when we're going to see that kind of demand really pick up again. It's not there yet because everyone sees it's in a bear market and no one wants to touch it. But just anecdotally speaking, from talking to my subscribers and other people, I just get the feeling that people still believe that this is a long-term bull market. They believe there's going to be a bubble phase coming, but at the present time, they see it's a bear market, and a lot of people just don't want to ride this out. So I think a lot of people are just waiting for this thing to bottom and put in a stronger footing there. And so I think a lot of people are going to come back into this market after they see a bottom.
Isn't it interesting, though, how these markets never behave the way you expect them to behave? They always act to frustrate the majority of players in the market.
Absolutely. I mean, that's I think it was Richard Russell who said that the job of a bull market is to shake as many people off along the way, because you need downturns, you need corrections to shake people out and bring in new hands and stronger holders. And that's exactly what's happening here. The people that are still in the market are very, very strong hands. And that's why when we get this turn, the pace of the rebound, or the strength of the rebound, is going to be over time much stronger than people would have expected. I mean, you go back to the 70s, that 1976 bottom, gold rallied back to its high in 18 months. So that was really impressive, from something like $103 an ounce to $195 or thereabouts. I mean, that is a huge rebound in just 18 months time. So I think that's it's going to surprise people. Maybe not necessarily in the first 2 or 3 months after the bottom, but looking out 6, 9 months, a year, 18 months, I think it's going to surprise people how much gold rebounds.
Right. And when these things do turn around, they can turn around very quickly and violently, right?
Absolutely. Absolutely. Yeah. It's so difficult on both sides to figure it out or get a handle on what's going on. And that's why, you have to keep the big picture in mind, and we're in a bear market, but this bear market is just about over with. In my opinion, like I said, I'm just looking for the final move down. And then after that, market participants should realize that the bear market is over and we're back in a bull market. And that is what needs to, that's what people need to realize.
Yeah. So what are the signs once it starts turning around? How do you know?
Well, it's so tough to say, because I thought we saw those signs early in the summer, and we did get a big rebound. But obviously, it looks like we could possibly make a new low. I mean, the stocks have already made a new low; the metals have not. It's just really difficult to say. It's extreme bearish sentiment, and it's the price action of a rebound. It tends to be when you're in a secular bull market and you're coming off of a major bottom, the rebound should be very strong, and really things should move up kind of in an unabated fashion. So I guess that's what you really need to look for. You need to look for extreme bearish sentiment, and I know we have that already, so it's difficult it's difficult to pinpoint exactly where that's going to happen, but that's really what you need to see. You need to see that extreme bearish sentiment, and at the same time couple that with very strong technical support. And so, for example, if you look at gold and you draw a trend line from 2001 or 2002, that trend line, the support of that trend line now comes into play around $1,100, and at the same time, a 50% retracement of the entire bull market. That's a very strong target. That's sitting at about 1085 or 1087. So that kind of gives you a little insight into what I'm looking at here. Those are some very strong targets around 1100. We have strong support at 1200. So again, if gold breaks below 1200, I think those are the targets that you want to look at. And obviously sentiment is extremely bearish right now, but if we do break lower below 1200, sentiment will get even more bearish. So those are some of the things that I try and look for. You want to see that extreme bearish sentiment, but you also want to look at the market and figure out and get an idea of where that really strong support is. And with respect to silver, that is, I believe, you can draw a trend line dating back to 2003, and that comes into play at about $17 or $18. And also, I mentioned the history of these bear markets and how gold stocks are down about 63 or 64% right now, with 67 to 68% kind of being the average of the worst bear markets, excluding the biggest one. So these are just some things that tell me that we need to go a little bit lower. And so, that's kind of how I'm looking at things right now.
Yeah, it makes total sense. So basically, stay the course. Would you say that it's a good time to buy right now, or stay away and, wait for things to turn around?
Well, it really depends on the investor out there, but I would say you can afford to be patient. There's two scenarios. The one scenario is that we do plunge to new lows, and if that happens, I think you definitely want to buy that plunge, because I think that's going to give us kind of a V bottom. Now, the other scenario is we don't have that plunge to a final bottom, and we just kind of scale along here and make a base. And in that case, you can be a lot more patient and kind of wait for this base to form. You don't need to chase that immediately. So as far as making an immediate purchase, I would do that if and when the market breaks to a new low. Otherwise, I'd be patient and kind of let a base form for a couple months.
Mm-hmm. Yeah, so be watchful. I guess they call it in the medical profession watchful waiting, right?
Right.
Or if you've got the right temperament, you could get in now, but maybe have some very tight stops, or you could be buying the physical now too. What's your real downside on the physical? You're looking 1,200 as very tight support, huh?
Right, and even, and if I'm correct, and we do kind of plunge, and maybe we make a low below 1,100, that's not going to be sustained for that long a period of time. So, let's say that happens and we bottom at 1080. That's kind of one target I have. A couple of weeks after that bottom, we could probably be back towards 1,200. So if you see those prices, you're going to have a very limited chance to buy at those levels. One thing you could do is take the money that you want to put in and just kind of space it out over the next couple months. So, that's a way to kind of take emotion out of it. And I'll also mention that, I think a lot of the stocks, I shouldn't say a lot of the stocks, but a good amount of the stocks have already put in bottoms. So there are parts of the sector that I do think have bottomed. It's just that, we need to see the HUI bottom, we need to see gold bottom and silver bottom. And when all three of those bottom, at that point, everyone will know the bottom is already in. But there are some parts of the sector that I believe have already bottomed.
And hey, one more question. Anything with some good dividends that at least you get paid to wait and can get some nice returns while you're waiting?
Well, one thing that's interesting is I think we're going to see a lot of the larger companies cutting their dividends just because they're in financial turmoil. And something that's interesting is actually the financial stocks, they cut their dividends right around when they bottomed in early 2009. And the XLF ETF had a spectacular move in the first year after a bottom. So dividends, I'm looking for, my subscribers and I were looking for more capital gains and not dividends. So I'm not the expert on that, but I do think you have to be careful because a lot of the mining companies that are paying dividends, they could end up cutting those dividends. And to think like a contrarian, that's not necessarily a bad sign because a lot of times when companies do that, it's usually at the very end of the bear market.
Right. Yeah, that is a good contrary indicator. You're correct. So anyway, Jordan, give us your website, how we follow you, social media, all that.
My website is thedailygold.com. I am on Twitter, but I don't post very much, but I think The Daily Gold is my handle. You can email me at jordan@thedailygold.com. I'm most responsive to that.
Excellent. And, of course, financialsurvivalnetwork.com. Don't forget, we're having our Liberty Mastermind Symposium in Vegas, February 21st, 22nd. Go to libertymastermind.us and sign up at financialsurvivalnetwork.com. We've also got a link to the symposium and get on board for the free weekly newsletter. Got a good piece coming up on SantaCon 2013. I got to witness it firsthand this weekend in New York City, and you just cannot believe the goings on there, the decadence, and Western civilization is really in trouble. So financialsurvivalnetwork.com. Sign up for the newsletter. Jordan, it's great connecting with you again. We'll talk to you again real soon. Hopefully after the sector bottoms out, which will be soon, we're expecting, and we'll connect then. Take care.
You too. Thanks, Kerry.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals, that you can hold in your hand, tax-free. There's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you. Our friend Tom Dyson at the Palm Beach Letter is giving away free copies of a really cool report he put together called How to Protect Yourself from America's New Secret Police. Inside, you'll learn all sorts of simple, everyday tricks you can use to make yourself a little less visible and vulnerable to scammers, hackers, and even the federal government. For instance, inside Tom's report, you'll learn which free internet email service never to use. This company doesn't care if your account gets hacked or not. Or things the government must tell you if they request your social security number. And how to spot skimmers lying in wait on ATMs and gas pumps, and much, much more. These tricks and secrets are low-hanging fruit ideas. You don't have to invest time or much money into them. Most are free. But by taking some basic measures, you can make your privacy much harder to invade than your neighbors. Tom's report is available for a limited time to listeners who take a trial subscription to his newsletter. Just visit the Financial Survival Network homepage for more information, or go to www.palmbeachletter2.com. That's www.palmbeachletter2.com.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.